Hi, everyone. I'm Brien Lundin, executive editor of Gold Newsletter, and I'm here at the Metals, or it's actually Minerals Are Our Future, or The Future event sponsored by Big Rock Industries in Stillwater, Minnesota. This is a wonderful event. We get to talk to some investors. We get to present the story, the metals and mining bull market to investors. And we're highlighting a few companies at this event, one of which is U.S. Gold Corp. We had the pleasure to talk with Luke Norman, who's one of the co-founder of U.S. Gold Corp. It has been a stalwart in the industry for many years. A lot of successes behind him. But Luke, you're the chairman of U.S. Gold Corp., and it's a story that I'm familiar with, and it's a story that a lot of U.S. investors are familiar with because it is a U.S.-focused story, which is a bit different. You don't see a lot of that in this market. There are a lot of Canadian companies marketing to U.S. investors. You're taking the standpoint of this is a U.S. company, and therefore it's very easy for U.S. investors, U.S. funds to get involved. Everything from branding down to the project, the CK project in Wyoming, and which is the linchpin of the company. Your motto for U.S. Gold Corp is the right stuff in the right place. And now you've kind of modified that with the right time. That, to me, is the key investing argument for what you have. You have a project that well over 1 million ounces of proven and probable, well along the way toward development, a definitive feasibility study imminent, which I'll get to in a minute, I think is a big catalyst. But tremendous economics. I mean, there's a lot of companies out there that are benefiting from the huge surge we've had in the gold price. I mean, the average mining margin for a profit margin for a gold miner today is greater than the gold price was last year. So it's just phenomenal. Nowhere have I seen that it makes a greater impact than on the economics of your project. So let's just try and set the foundation here for our viewers and listeners. Give us the elevator pitch for U.S. Gold Corp and the CK project.
Yes, certainly. And yeah, the rarity of course, us being a U.S. listed company, I'll just touch on that really quickly because what I recognized with one of my previous companies that you're familiar with, Gold Standard Ventures, when we graduated from the TSX Venture up into the New York Stock Exchange, the turnover of our shareholder base moving from Canada into the US was remarkable. And that also was correlated with the increase in share price. I think the US are more familiar and comfortable with higher share prices. Now, of course, we have to remind people that share price is not indicative of market cap, but the higher share price, and so we kept a very tight structure on this company. We only have 16 million shares out and listed on NASDAQ because NASDAQ was just the opportunity at the time. But the foresight was list it in the US and keep a very tight share structure, a higher share price, and the US investors will feel comfortable with the company. So the company, in a nutshell, is we are a shovel-ready development gold and copper project just sitting 20 miles out of Cheyenne, Wyoming.
Fully permitted.
We've got the definitive feasibility study, as you mentioned, just getting wrapped up right now. And our intent is to launch into development as soon as this month.
Yeah, and we mentioned that before off camera and off mic. But I had refreshed my memory on the story and looked into it recently, and I didn't even look at the market cap. It's usually the first thing I look at because I figured you had a $700 or $800 million market cap at this stage of development, the resources you have, the economics in the U.S. listing, everything. And I was amazed to see that it was about as little as a third of what I was expecting it to be. And in fact, if you run the numbers, which you cannot. You cannot run these numbers. You look at the current gold price. You look at your projected AISC for production. You look at your production level, especially in the first few years of mining. And, just me looking at it, broad brush, you're going to have free cash flow in your annual cash flow roughly equivalent to your current market cap.
Yeah.
That's amazing.
Mm-hmm.
And you know,
And in a bull market right now.
in a bull market, that's the whole thing.
Yeah.
So the timing is something that I know you planned it. Of course, you planned on $4,500 gold when you go into production.
Of course. Yes.
Thank you for that. But it's just a remarkable timing. And in this market environment that we have a market that is largely overlooking these kinds of opportunities. Mm-hmm. It's just so the next step is the definitive feasibility study, which I think could be a real catalyst in showing investors those kinds of economics. Give us an idea of what the economics are now and what you forecast or the changes will be in the definitive feasibility study.
I always like to be mindful of forecasting because it's in the hands of engineers and independents right now. So
right.
My guesstimates, but I'll give you sort of my general feel, and I do keep my tools out of that tool shed because I'm of course a capital markets guy primarily, but we put out a pre-feasibility study in February of last year. And this shows you how abrupt and quick this bull market is really fired up. But in February of last year, we were using $2,100 gold and $4.10 copper as our benchmarks.
And had very robust economics at those levels. Yeah.
And they were, we had a all-in sustaining cost of around $940 based off a $277 million CapEx. Now, that CapEx is going to increase substantially, because there's been a fair bit that's changed around through the optimization. We took it from pre-feasibility. We spent the last almost 12 months working on optimization around the project, looking at Jamison Cell, for example. I don't want to get too far into the weeds, of course, but a whole slew of different things. But just going back to February, that $2,100 mark, we had, like you said, really robust economics. So that gave us the excitement level that we needed to push ahead and go forward with it.
Yeah, well, so let's roughly look at that, because I know you can't do anything more than that. And you have to kind of leave it up to me because you're the company you're up and you can't project these numbers. But even if the CapEx increases by 30%, the gold price has doubled.
Yeah.
So the gold price has gone up 100%.
Right.
And so those economics, when you come out with that DFS, are going to be, I would think, pretty extraordinary and a wake-up call to the market.
Yeah, and look, energy costs have been basically static. Yeah. Our power that's coming to site actually came in slightly lower than what we had projected in February. We're getting amortized power right to the site for 7.6 cents a kilowatt hour. I think we had previously figured on 7.9 cents kilowatt hour. But look, what has been pretty linear also over this more recent period is inflation. Now, through 2020, 21, when we first did a pre-feasibility study through till 25, inflation was rampant. Yeah. So I think we've seen some leveling there, which is highly encouraging, and that obviously gives us a little more strength in numbers when we do come with the definitive.
And all of that adds to or highlights the fact that this is imminently financeable. Mm-hmm. I mean, your CapEx, if it does go up 30% or something like that, in this market, it's easily financeable. I mean, I would think you'd be able to do that purely in debt.
Yeah, well, predominantly in debt for sure, because there's a lot. What we are is one of the very few, if not one of the only, fully permitted projects that's owned by a junior out there, right? Yeah. So there's a lot of capital out on the sidelines right now. A lot of people looking to invest into the mining sector, but also into project level financing. And there's just not a lot of projects out there that are at our stage of readiness. So we're imagining the definitive obviously will ultimately give us a document that should lower the cost of capital rather than going in there with a pre-feasibility study and everyone knows there's going to be cost overruns, etc. So I think there's a very, very real chance that we're going to fund the vast majority of this project in debt. And heck, I would definitely like to do it all, of course, because it lends itself so nicely to debt.
And in the near future. And so this is a project. And again, one of the only, if the only, projects at a significant gold production project in the U.S. that will be able to take full advantage of this cycle.
Yeah.
This remarkable cycle we are in metals.
Yeah. Well, we don't know that yet because it could be just the beginning of a very long, right?
It's going to get more remarkable.
Yeah.
I like the way you think.
Yeah.
So the project, another interesting aspect of the CK project that, to me, is that you capped it. You said, this is what we want to show the market. We want to show it over 100,000 ounces a year for 10 years. That's a viable project. Let's constrain that resource to that, do the numbers, and get the mine built. But you've left a lot of upside in the project still.
Yeah. This is a porphyry system, so it just continues to depth. 80% of the holes we've drilled, actually all the ones into the ore body have bottomed in mineralization. So that mineralization just continues. In fact, the ore body, it looks almost like an upside down cone or a mirror image of what the pit shape would be like. So
really?
Mineralization just continues sort of triangular down. So it's open laterally as well. There is additional extension to the deposit. But yeah, money was very tight. We had a $30 million market cap at one point in time. So to want to go and spend another additional $20 million chasing ounces that might not ever get developed because there was all the engineering to do, there was the permitting to do.
And the dilution you would have had to do to
exactly.
fund that.
Yeah. So you're diluting for no sense or purpose. So now it's very much a discussion point within the company is, hey, look, we're about to go into the development phase of this project. Maybe we look at adding some more ounces, and we're literally just having those discussions now.
Yeah, and there's a big difference from doing exploration and development when you are essentially a burning match in a junior company, as opposed to doing it from cash flow. Mm-hmm. And the kind of cash flows that this mine will produce, and in the foreseeable future, I would think the next step at the DFS is going to be the financing stage and fully permitted, so it's really just going to go into a timeline for construction. So there'll be a window there. The market can look ahead and see the kind of cash flow you have coming out, and you can do all sorts of things with that.
Of course, yep.
Especially with a tight share structure. Like that.
And look, you questioned me about this earlier, and I'm certainly not one. I told you the asset's completely unencumbered, but this is the type of project where you could consider doing a little bit of a forward sale and some of that pre-production to raise part of the equity required to put this into production as well. So that's the beauty of having, again, an unencumbered asset like this, is we have that flexibility, malleability to be able to make these decisions on the fly.
Engineering to optimize all of the numbers.
Yeah.
And the DFS, the gold price that it's going to use, do you have an idea of that yet?
We're running those through, we kind of share it out amongst we take the consensus, of the analysts, right? But then you also go through, you've got to look at trailing averages and such, because generally engineers want to use a 3-year trailing average, which is not really indicative, I don't think, of gold. Gold is not going back to $1,500, $1,600 an ounce. And then you look at your peers and you see, okay, what are the last few pre-feasibilities or PEAs or feasibility studies used, in the last 2-3 months? But it's vying its way up towards around $3,000. And then look, our copper component, you've got to remember that copper is 30% of the economics on this project.
Just hit $6 the other day.
Well, I was going to say, it was 30% of the economics on the project when we did all our pricing at $4.10 copper. It's up 50% from there. So it's going to be, I imagine we'll be somewhere in the realm of $3,000 and somewhere around $5 copper.
And considering your economics were already very robust, based on $2,100 gold and $4 and something copper. that again is going to be a big wake up call to the market.
I mean, of course, we have to caveat that the capex is going to move significantly higher. So all those sensitivities are now thrown, to the side. If I threw $4,000 gold in last year's sensitivity table, you might as well put me in handcuffs because that would just, the numbers would be.
But again, the gold price has doubled, and
yes,
I have a feeling your capex is not going to. And even so, capex is a one-time expense.
Yeah,
and so the valuation goes up considerably.
Yeah,
still.
Well, that's why one should consider, again, adding more ounces,
right?
Or at least looking at the blue sky potential beyond the reserve.
Yeah.
Because every one of those ounces, when you're building the project in a plant, it's a 60-year plant for a 10-year life of mine, you start adding, every 100,000 ounces is going to add on 100 million plus in net present value. And we were touching on that math earlier, but it has a really big impact.
The throughput and extend the mine life.
Yeah,
too easy.
You wouldn't up the throughput. I think it's going to be a 20,000 ton per day operation. Okay. I'm just saying under the current plan of mining, you could certainly consider that. But you would probably just extend the life of mine.
Yeah. But as they say on the late night television commercial, but wait, there's more.
Yeah. Yes.
So, you have two other projects. More exploration oriented, but the one that's really exciting to me is the Keystone Project in Nevada.
I always quip that it's the big lottery ticket. When you buy
big lottery ticket.
When you invest in US Gold Corp, you've got the biggest lottery ticket out there I can think of from an exploration perspective. So it is a massive standalone domal district in Nevada that sits 10 miles across the valley from the Cortez complex.
Right.
And I know you're familiar, but maybe people who are listening aren't as familiar. But the Cortez complex started off as the Cortez mine, which became Cortez Hills. It was owned by Placer Dome. Placer Dome made a discovery, which is the Cortez Hills mine. Barrick came in and took them out for $11 billion in 2004, I believe it was. Well, the discovery was 4, takeover was 7. But it added about $7 billion in value to Placer Dome. Now Barrick own it. Yeah. It's the Cortez complex. They've made several other discoveries within that complex, one being the new 4 Mile discovery. 4 Mile alone has added about $25 billion in value to Barrick.
It is amazing. It just kind of exploded.
It explodes. Yeah. And we're sitting across the valley with near identical geology, a standalone domal, intrusively lifted lower plate with Wenban as the host rock, of course, at Cortez, with massive swaths. We've done some historic scout holes there. We had 1,800-foot intercepts of heavily altered Wenban, near surface. I mean, it's a wow moment for Keystone, and it's getting ready, I think.
And you say it's a lottery ticket, and yes, there is some exploration expense. It does take a lot of holes to find these kinds of deposits at depth and vector in on them. So when you don't have cash flow, that's an expensive thing. You undergo that kind of dilution to hopefully hit that prize. You're going to be really in the catbird seat as you advance toward production, as you get CK financed, that you can do a lot of things with that project. I mean, you have, backing up a bit, with the CK project, you're on that Lassonde curve, but you're in the lower risk side of it. Mm-hmm. You have that upside, but you have real value established. On the beginning of that Lassonde curve, if an exploration company, they can find something and really ramp up, but they can also go to zero. Yeah. You have the real value. So there is something very important and very valuable there, that you have your downside somewhat protected, but you have similar upside right ahead as you ramp up toward production. Mm-hmm. But that also gives you still have that exploration component that gets the retail investors especially really excited.
Yes.
And I don't know that anybody else can boast of an exploration project like that.
No.
With the capability to actually advance it.
Yeah, and we own it 100% outright. The holding costs have been relatively minimal, sub $150,000 a year. But I do think it's time to take or blow the cobwebs off Keystone. And
it's a great story.
Yes. Oh, yeah, it's remarkable.
It's a great
Well,
kicker.
look, those kind of districts, it's you know, a multi-decade process to tie a district like that together. You can end up with somewhere in the realm of 500 plus
Yeah.
subsurface right holders that you've got to spend all this time bringing together and getting signatures. All those hard yards have been done for us. The other thing, which is really key with Keystone, that I didn't mention to you, is it's currently under plan of operation. Now, if you have a big exploration project in Nevada and you want to go drill it right now, you're looking at 3 years.
Yeah.
3 years of lead time. You can get in under certain licenses on small areas of notice of assessment. It's called. No, it's not notice. Anyway, you can do 5 acre parcels.
Right. Yeah.
But to really get into a full scale exploration program, you got to wait 3 years. Well, with Keystone, with the plan of operation, all that's been done. It's in our review
For the entire project.
for the whole. For the majority of the project, because
Okay.
we've done some additional land consolidation
Okay.
along the way. But
Yeah.
for the heart of the district as it stands right now, it's under plan of operation.
And it is a considerable land position. Isn't it like 20% of the entire Cortez Hills complex,
It's
land
about,
area wise?
comparatively, it would be about that size. So it's
Yeah.
20 square miles. And I think that, the Cortez complex is somewhere in the 100 plus square mile range.
Okay.
So, yeah.
And you can hold a lot of gold in that kind of a land position. in
It's
that
it's
area.
not, is there a gold deposit there? It's how many. That's the reality of Keystone.
Well, Luke, I think we've covered it here. Very exciting. I'm excited about it much more than when we started talking about it, because the key to me is, well, there's a lot of keys, but this is a U.S. project. It's the kind of thing that's going to get the U.S. big money in the U.S. generalist investors involved. Everything from the branding to the project to the economics, and again, the economics are going to be highlighted very shortly. That's going to be a big catalyst.
And I think the best trading symbol in the industry too.
Yeah,
USAU.
yeah. It
Yeah.
that's a big part of it. The branding.
Yeah,
We've
of
seen
course.
the advertising on CNBC and major media as well. It will, I think, be the go-to gold story in the U.S. markets, but rightly so. Rightly so, because at these gold prices, you are the right stuff, the right place. The timing is beautiful because a market like this, you can literally mint money, and you're about to show the market that. So congratulations on that. Looking forward to the upcoming news.
Me too. Thank you very much, Brian.
Great to be with you.